So I get the question all the time, but Sean, I need to replace a roof and my bank account for my rental property only has $2,000 in it. The roof's going to cost me $10,000. I got to pay for it over here. And I say, no, you don't. I said, what you're going to do is
I'm here with Sean Daley, a CPA and a local real estate investor in our upstate New York market. And we're talking all about real estate investing strategies and tax strategies. What tip would you suggest, or what tip do you have for people watching this podcast?
Yeah, so the biggest thing that I come across all of my clients is record keeping. Everybody struggles with it. I personally struggle with it too. It is not an easy task. It is a long, brutal task that nobody wants to do. And it really impacts the timing of when you can get your tax returns done. It really impacts you understanding your business inside and out and really knowing how much money you're truly making on a rental property or your business. So the tip I would really give is to have a bank account specific to your business, or in this case, each individual rental property, and to flow all of the income and all of expenses in and out of that bank account. So I get the question all the time, but Sean, I need to replace a roof and my bank account for my rental property only has $2,000 in it. The roof's going to cost me $10,000. I got to pay for it over here. And I say, no, you don't. I said, what you're going to do is you're going to take the $10,000 out of your savings, whatever, wherever the money's coming from. You're going to transfer it into your rental property bank account, and then you're going to pay for it out of that bank account. Now, we are going to treat, from a tax perspective, we're going to treat that money coming in as a contribution in. So no harm, no foul, no impact on your taxes. And then that money coming out is an expense that you'll be able to write off or depreciate. Now, if you do that for the entire year and you are working with your accountant, you're working with your CPA, and you have every single bank statement and everything's accounted for in there, money in, money out, you are done. You don't have to pull receipts from over here. I use my credit card over there. I borrowed cash from this person. Everything is in your bank account. You pull 12 months worth of bank statements. There's all of your activity. You could even take it a step further. You can link up your bank accounts directly to QuickBooks nowadays. You can have it automatically populate, right? Set it up some rules, automatically populate right into the categories. Your accounting could be done in a matter of minutes if everything is flowing through to one bank account. And then your record keeping doesn't need to be as crazy, and I've seen the IRS come in and sometimes they ask for individual receipts and sometimes they look at a bank statement and they'll say Home Depot. And it's like, okay, we know it was a Home Depot. We don't need to see the actual receipt that you got that day. You have a bank statement that shows it was from Home Depot. So that's probably the biggest tip of the week and tip of the year. We're going to call that one because you have to do it for the entire year. And, again, work with your accountant CPAs and, make sure that that's a good structure that would be able to give to them when it comes tax time so they can make sure that they get you done quickly, efficiently, and also as best as possible.